The Monetary Policy Committee of Reserve Bank of India increased the repo rate by 40 bps to 4.4%. Repo rate or the policy rate is the key interest rate for the economy, which is decided by a 6-member committee known as Monetary Policy Committee. It is expected if the repo rate is changed, then the interest rates for home loans, car loans, etc. will also change. So does RBI's repo rate hike this time translate to an increase in interest rates on loans? The short answer to the question is yes. ICICI Bank, Bank of Baroda and some other banks have increased interest rates on loans after the RBI decision. There are two dominant loan rate regimes in the country at this point in time: marginal cost of funds based lending rate and external benchmark based lending rate. The main objective of the loan pricing regimes is to make interest rates sensitive to changes in policy rate. The MCLR regime came into force on April 1, 2016. As the name suggests, MCLR is linked to the marginal cost of funds of banks. 53.1% of the loans of commercial banks are linked to MCLR as on December 2021. Banks have started increasing their MCLR even before RBI increased the repo rate, because interest rates in the economy are going up, so was their marginal cost of funds. Now with the repo rate increase, MCLR-linked loans will further go up. Another new loan pricing regime was introduced on October 1, 2019, known as external benchmark-based lending. Banks were asked to link all floating rate personal or retail loans and loans to micro and small enterprises to external benchmarks from October 1, 2019. 39.2% of the loans of commercial banks are linked to external benchmarks. For most banks, the external benchmark is the repo rate. Now that the repo rate is hiked, lending rates linked to repo rate have started to go up by at least 40 bps. Banks add the spread over the external benchmarks. So, if the repo rate is 4.4%, the home loan rate will be like 6.9%. The difference is the spread. One point to remember: the loan rate regimes are only applicable for commercial banks and not for non-banking finance companies like HDFC Limited or Bajaj Finance. There is no RBI mandate loan pricing regime for NBFCs.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.